Good day, and welcome to this quarter's overview of the returns on our cash and income solutions. Many around the world wait with bated breath for interest rates in their respective countries to fall, and the situation is no different in South Africa. Although our repo rate remained unchanged in the previous quarter's Monetary Policy Committee meeting, the rate of 8.25% remains relatively high compared to our prevailing inflation rate, thus indicating the South African Reserve Bank is continuing with its efforts to control inflation and stabilize the economy. It is not all doom and gloom because the tightening of the monetary policy and high interest rate environment presents an opportunity for our interest-bearing funds, such as the ones we will be reviewing. Let's jump in. First of these solutions is our Momentum Money Market Fund. The fund aims to offer competitive interest rates above bank deposits and traditional savings accounts. We had anticipated the downward trend in inflation to continue. However, we experienced an uptick in inflation in the first 2 months of 2024 after two consecutive months of lower inflation at the end of 2023. Furthermore, the repo rate remained flat and fixed rate yields declined in response to no future rate hike prospects. As a result, we see that the money market fund's returns are trailing behind the benchmark and its peers. Despite the previous quarter's performance, if your client's goals have not changed, we encourage you to stay the course as cash remains an attractive asset to provide for your client's liquidity needs. Our second cash and income solution is the Momentum Enhanced Yield Fund. The Momentum Enhanced Yield Fund is a low-risk, domestic-only liquid fund. It has a relatively wider investable universe than the Momentum Money Market Fund, which allows it to provide income in excess of bank deposits and money markets. On screen is the fund's performance over various periods. We see that the Momentum Enhanced Yield Fund had a strong start to the year with its return of 2.32%, outperforming its peers and benchmark. Our position in fixed-rate instruments allowed us to benefit from elevated yields on certain curves, and our position in floating-rate instruments allowed the fund to respond timelessly as other curves repriced. This strategy has been beneficial to our investors as the fund is a top quartile performer and has ranked 8th of 40 funds amongst its peers in the SA interest-bearing short-term for the quarter ending March 2024. And finally, we have the Momentum Flexible Income Fund. The mandate of the Momentum Flexible Income Fund allows the fund to diversify across fixed income instruments. Its investable universe includes money market instruments, credit, bonds, inflation-linked bonds, and other sources of income-generating assets. Depicted are the fund's returns compared to its peers and benchmark over various periods. Although SA bond yields were placed on the back foot due to the negative sentiment of a deteriorating fiscal outlook for government finances, as well as the uncertainty of the May national election outcome, the fund managed to outperform its peers and benchmark. To achieve this, we increased our overweight position as yields traded higher over the quarter. The negative sentiment reflected in nominal bond yields is showing good value on a nominal and real yield basis. Furthermore, we exited the position in property equity in this fund due to valuations trading above our fair values and return expectations for this asset class to be below that available in fixed income assets. We believe the elevated yields are pricing for a negative outcome on all the unknown SA macro events, even though it may not become a reality. We see good value opportunities in the nominal bond curve. The returns for our cash and income solutions have been a mixed bag. Nevertheless, we believe that there is still value in the South African fixed income market. Diversification across sectors remains a key element in our portfolio construction process, and our approach remains to hold exposure to counters that are justified on a risk-adjusted basis to deliver on your client outcomes.